And welcome to the new episode of Blockrevision, and in today's trade idea section I will have for you once again DocuSign stock. So for those who are not familiar with what is a company, it's a company that which services allow companies to manage their electronic agreements. It's a huge market that need to be developed that will use electronic signatures as a way to confirm different rights. So DocuSign right now is in a stock that has failed to fulfill my scenario of where we would have to bounce. So I was suggesting in the middle of September that DocuSign is about to rebound fiercely from this line, or at least from this zone. We have confirmed rebounds from this one area of 264, but finally, as price action has slowed down, we have finally moved to the downside. So let's talk a bit about DocuSign and its potential to move higher from here. Right now we can find that earnings per share for next year is on a upward trend with 27% to an upside, and also sales quarter over quarter is nearly at 50%, so it means the company is favorable to future growth. Right now also fundamentals are talking for the company to move higher, where the condition of a company is upgrading little by little. Right now versus industry, however, versus such companies as Adobe and also other competitors, we can find that operating margin, net margin, return on equity is much lower than other companies. However, it doesn't mean that this growth stock may stop from growing. However, we need to take a notice on that there are still lots of unknowns about this DocuSign company in terms of its future performance. The indicator that might be worrisome to some analysts is debt to equity ratio that is on a high level regarding industry. So it's an indicator that when it's high, that may result in a quite high volatility in earnings, as company is prone to cover their expenses with a high interest rates debt sometimes. So that's something that needs to be improved and may stop some long-term investors from taking a bet on this company. So among others, we can find that analysts find DocuSign to be traded even higher, but it's a one-year prospect, so we shouldn't really suggest ourselves with such a long distance and far-fetched projections when taking a short or medium-term bets. But in terms of long-term, it's this stock still looks fine, and that's what analysts say. So in terms of some news of recent, we can find that hedge funds are cashing out of DocuSign. That's an article of 28th of September. So we can find that after there's a number of hedge funds with Docu positions right now with quarter two of 2021. We can find that the amount of hedge funds are decreasing. That's because of very astonishing growth of recent. So it's quite understandable that some of hedge funds might just take some profit. So let's look at DocuSign technicals. Right now we have just smashed this demand zone and shown definitely that the stock is not predestined to trade higher than 270 as of right now, and the possibility of crossing this 270 bucks is very difficult of right now. Also, we have just crashed through this highs of February of 2021, so it means there is a high probability of heading lower to another support that is marked right at the 235. So if you'd like to just make a trading bet from here, that would be something like a short one with a possible stop loss right at the 267 with a take profit at 237. So right now risk reward ratio with this scenario is at 2.39. So it's not a very bad one, but I would find even the stock, the stop loss, to be fine, even with a little bit shortened area to the upside, and something that might be set as well just at the top of the shadow of this recent candle of 27th of September. So right now with a risk reward ratio at the level of 3.09, this short bet is much more profitable in terms of trading idea. So in terms of area of an entrance, I would find this area as quite interesting. So that would be an area of somewhere just above those shadows of those little hammers at 269, 62 and also 256. We can also find that on a forward chart we still haven't really gapped up this bracket on the chart, so it means that with a technical analysis rules, very often those gaps are fulfilled, so we may hang on a little for this gap to be fulfilled, and so we would like to have seen DocuSign to hit maybe this 262 level for this stock to move lower anyway. So right now on a forward chart we are forming something like, after this bearish hammer that was trying to stop this stock from falling, we have formed something like lots of dodges that are signalizing us that the traders are quite indecisive in terms of where the stock might be heading next, and with this indecision there is a high probability of this stock to continue its preceding move. Okay, so I guess I have explained everything about DocuSign, and even with these projections, these bullish projections, that DocuSign is about to move higher from here. Mr. Market is always right, and we need to respect what he's saying to us, and definitely the time for DocuSign to perform better than right now is not right now, and we need to wait at least to get to some other area where much more demand will be shown. Right now there is a area of a possible free fall down to the 236 at least, and we need to respect this. So that's it for today's episode. Thank you very much for watching. If you have any questions, just put it in the comment section below the video, and see you in the next episode.